Welcome to Charts Today. My name's David Linton, and today's edition for Wednesday, the 23rd of November, comes to you from London. And the UK news this morning is plastered with stories on Manchester United being potentially up for sale. We saw the big move there in the price spiking higher, but just not really managing to go higher. And of course, it has been a pretty sorry story, even though everyone says that Man U is worth a fortune. It has been a pretty sorry story over the last 10 years, just looking at the share price chart. And of course, the first thing I want to do anytime this happens is just hit the T key and just see what the trends and targets are. And interestingly, in August, we had this new upside target to $16.90. Maybe that's where we'll settle for the price. There's talk this morning of it being worth double what it is now, but the reality is there's no targets to suggest that. And if the Glazers had been technical analysts, they would have chosen the breakout that we saw in 2018 to really be looking to sell into that market when Man U was making new highs at $27. So it's just quite interesting seeing that. Now, looking at the markets in general, we've got quite a lot of green on the screen this morning, so looking a little bit better. Remembering this is my weekly, my daily, and my 60-minute chart, my long-term, medium-term, and short-term view of the market. I'm running on Refinitiv Icon here, but you can be running on Bloomberg, Trayport, Montel, lots of different systems that you can run Updata on top of to give you this extra granularity of the market. And I look at hundreds of charts a day because I've just got this 6-chart view of the market, long-term, medium-term, short-term, and that's the power of being able to just at a glance see what's going on. So the dollar is actually pulling back on the long term. We've been talking about that to clients for quite a long time. We were bullish the dollar. We said it would be the year of the dollar 2022, but now that seems to be over and we're pulling back. We're below the cloud on the medium term now, so that's medium term bearish, and that means that the euro is actually looking medium-term bullish, being the main constituent there on the dollar, and we're seeing here that we are just pushing higher above the cloud, so looking better for the euro. Sterling is actually knocking on the door of 120 against the US dollar, so looking stronger there as well. Markets really starting to like the UK's fiscal stance. It's helping on the currency, but of course not necessarily on the economic situation. And if we look at against the euro, we are seeing sterling just edging higher here as well, just nudging that 116 level. So really having found the lows earlier this year. Looking at Bitcoin, we've recovered from below $16,000. We do have downside targets for Bitcoin. I've had quite a few people on social media saying, oh, you're too negative, you're not doing any favor for crypto investors. I cannot ignore the charts. The targets are there, whether you like them or not, the targets are there. It's not me saying it, it's the charts are saying it, and that's the really key thing here. So we just cannot ignore these downside targets. New target activated yesterday to $9,000, so that's quite key. We're looking at the S&P 500 index. We're up 1.4% there, so that's looking a little bit better. And looking at the Nasdaq, we also saw a recovery yesterday, but really not enough to change the fact that we are in this downtrend with downside targets, bearish on the long term and medium term. We're seeing a relief rally within the downtrend, and so the trend is not necessarily your friend if you're a long-term investor there. The S&P 500 index is up very, very slight this morning. Just tells us that we're probably going to hold on to the gains today at the open in the US. And we look at the FTSE future in the UK, we're up 7.5% there, so that's actually looking better than the US market. We're bullish above the cloud on all 3 time frames for the UK. The oil majors being a big driver there, of course. And if we look at the DAX in Germany, we're down about 0.25%, so we are seeing a little bit of a mixed picture in Europe, but the reality is that's looking better on the medium term as well, but a shortage of targets, that's the real concern there, a shortage of targets, and we are hitting cloud resistance there, so maybe that's as much as we can expect in the German market. Japan's looking stronger, up 1%, we talked about that yesterday. Good upside targets now for Japan, and starting to look very bullish on the long-term fact that we hit the cloud support and are bouncing. Don't be surprised to hear the Ichimoku charts are bound to work well, because in Japan, of course, lots of people are using them, and so we are just seeing that more and more bullish. Looking at the Hang Seng in Hong Kong, we were up slightly, but the trend here is very, very different. We are below the clouds, and if you look at the Chinese market, I've been doing a bit of work for the Chinese investors for a presentation in January, starting to look really quite interesting as a double bottom potential, but we need to break this fulcrum at around 3,500 on the Shanghai index. India looking strong again, still looking pretty good there as well, and the Aussie market was up 0.7%. We'll look at the energy mix in a minute. We've got wheat down 0.4%, so looking a little bit weaker there. Just struggled to get back above the clouds, so we are just seeing that weakness there kicking in. Gold struggling to hold on to the high 1700s, so that's quite key. And silver is actually looking more bullish, sitting at 21.18. And US 10-year yields sitting at 3.81% on the 3.76 on the 10 and 3.81. So that inversion, the yield inversion that everyone's talking about, hasn't actually, it's come back. So that's a little bit more encouraging for markets. Tesla did recover a little bit yesterday, but that downside target is activated. We cannot ignore it. So looking at Brent crude this morning is down. There's news out that Russia is going to put a price cap on crude oil. That's affecting the price. We're seeing falls there of around 2%. So that's changed. We did actually put a report out to clients this morning, and we were pretty bullish on everything, especially in Europe. And that's the key. Once you see those new targets coming in, you can't ignore them. Note these targets on my alerts here for emissions. That's looking very strong this morning. We've got good targets kicking in there. They came in on my alerts. But crude oil has given us a change of sentiment, and you've got to watch those targets as they kick in, especially on the 1 minute chart that we see on the 60-minute chart. We move to the target, and the same for WTI. If you're trading anything short term, really, you want to be watching these targets. So quite interesting that we're seeing crude fall. We couldn't quite get above the cloud on the lagging line, so that's also quite key. Coal actually holding on to its gains, looking good above 200, back in 230, just starting to get back above this 60-minute chart. This is my medium term and my short term. My medium term, short term, and very short term, I'm using the 1 minute targets there. And if we look at US nat gas, that's been looking strong as well, back above $7 and looking really very strong. We're out bullish to clients there this morning with the targets. And of course, if you want those reports, you can just go to the Updata website, www.updata.co.uk, and go to morning call research and just register there, and you'll get the reports. So looking at emissions, we talked about that, back above that €75 mark. That's really quite key for emissions, and we're back into bullish territory there. We need to really break 80, but we've got very short-term 1 minute charts. If you're trading emissions, you want to be using these 1 minute targets. Absolutely essential. Notice how those targets were given and being met. They're clustering at around that 77.20, 77.40. We've got a little bit of way to go there to get there, but we're back above the cloud, looking quite good there. And then looking to the 60-minute charts, those targets being met as well. You just cannot ignore the targets. Now, looking at TTF, this chart rollover adjusted, we're sitting at 126 this morning. Again, we were bullish here. We're up 5%. We're breaking higher. That's looking good. The fact that we're breaking that level, but of course we really need to medium term to be breaking this sort of 140 level. That would be the lower high, lower low. We shouldn't be surprised to see that happen. We are heading into winter after all, and if we look at NBP, the 300 mark that was this morning, we were holding that 300, but we're back below it. But the reality is there that we are actually seeing the moves above as well. And looking at German power, we're seeing on the cow, we're at 361. We're looking much stronger here. We've turned the corner. We did give clients levels at German power. We said short term 375, medium term 325, and long term below 300. We didn't really get to those long term targets, so we are now looking to the upside. Power markets recovering, and if we look at the Cal 24, we see that happening as well. And across Europe, if we look at the European market, every power market in Europe up. This data comes with Updata Professional and Enterprise as standard. We provide it to clients coming from OTC Global Holdings, so really valuable to have all those power and gas markets included in your system. That's it for today. Remember, if you want to get the reports, just sign up. Until tomorrow, happy charting. See you then.